Hi, in this week's blog, I discuss navigating financial and tax changes after losing a spouse. Before I get to the key points discussed in the blog, I want to wish everybody happy holidays. That includes Merry Christmas and Happy Hanukkah, depending on whichever one you celebrate. I also want to wish everybody a Happy New Year. May 2025 be your best year yet. On to the topics covered in this week's blog. First, we have Social Security benefits after your spouse's death. It's important to remember here that it's not just knowing what the benefits are after your spouse passes. It's also about thinking about what could happen when one spouse goes when you're making those claiming decisions. You want to take both spouses into account and not make decisions individually. Number two, we have inheriting property, including stocks from a spouse. There's special rules related to your basis in the stocks that you might have owned and what happens to them after a spouse passes. And basis refers to what your cost is for tax purposes if you sell. There's also special rules related to capital loss carryovers and other things that you want to consider. Number three, we have tax rules for selling a home as a surviving spouse. And there's special rules here that can allow you to still consider your spouse if you sell your home within the first 2 years, and they can make a big difference. Number four, we have inheriting an IRA or retirement account. Again, you have options. You can leave that account in your spouse's name. You can combine it with your account. You can have it start in your spouse's name and then transfer it to yours. Depends on your situation, but there's some important things to consider. Number five, how your tax filing status changes. And this can have really important implications because going from married filing jointly to single, that changes your tax brackets rather substantially. And you want to think about this before because there's steps that we can take, which we discuss in the next section of the blog. That's number six, the importance of being proactive, using lower tax brackets before a loss. Remember, I said you're going to go from married jointly to single at some point. You might have a little interim stop as a qualifying widower, but you're going to get to single at some point, and then the tax brackets become much narrower, and that can have serious implications. So you want to make sure you take advantage of your opportunities to fill up those lower brackets and do some proactive tax planning. Number seven, benefits for future generations, a legacy of tax efficiency. Again, this gets into the point of being proactive. You want to think about future generations too. This relates to estate planning. This relates to Roth conversions and a number of other things that I discussed in the blogs. If you want to move forward with confidence, you really want to understand these issues. It could be hard. If you don't want to go it alone, I'm here to help. Again, happy holidays to everybody. Thanks for listening and have a great day.